Ever thought about how you can finance your dream car with an auto loan? It's a question that's crossed many minds. Auto loans, they're not just an abstract concept. They're a real, tangible solution, a bridge connecting you to the car of your dreams. They play a crucial role in enabling many of us to drive off the lot in a brand new vehicle. But what's the magic behind them? How do they work? And are they right for everyone? Stay tuned to uncover the mysteries of auto loans. Imagine wanting to buy a car, but lacking the cash to pay up front. That's where auto loans come in. Let's take a moment to unpack what auto loans are. Essentially, they're a type of financial agreement that allows you to borrow money from a lender, typically a bank or credit union, to purchase a vehicle. The borrowed amount is then repaid over a specified period of time with interest. So, you're not just paying back what you borrowed, but also a little extra for the privilege of borrowing. This arrangement is a win-win situation. On one hand, it allows you, the borrower, to get that shiny new car without having to save up for years. On the other hand, the lender makes a profit from the interest you pay on the loan. Now you might be wondering, how is an auto loan different from a personal loan? Well, the key lies in the collateral. With auto loans, the car you're purchasing serves as the collateral. This means if for some reason you're unable to keep up with the payments, the lender has the right to repossess the car to recover their money. Because of this security, lenders are often willing to offer lower interest rates on auto loans compared to personal loans. On the flip side, personal loans are usually unsecured, meaning they don't require any collateral. While this might sound appealing, remember, the lack of security makes these loans riskier for the lender, and as a result, they tend to come with higher interest rates. So, in a nutshell, auto loans are a type of secured loan designed specifically for the purchase of a vehicle. They involve a borrower who needs money to buy a car, and a lender who provides that money with the expectation of getting it back plus interest. Now that we've covered the basics, let's dive deeper into the world of auto loans. Getting an auto loan involves more than just borrowing money and buying a car. The process starts with a credit check. Lenders use this to assess your creditworthiness. A good credit score can open the door to more favorable loan terms, while a poor score may mean higher interest rates or even loan denial. So, before applying for an auto loan, it's wise to check your credit score and rectify any discrepancies. Next comes the interest rate. This is the cost of borrowing money, expressed as a percentage of the loan amount. It's crucial to understand that the lower the interest rate, the less you'll end up paying over the life of the loan. The loan term is another important aspect. It's the duration over which you'll repay the loan. Shorter terms mean higher monthly payments, but less interest paid overall. Conversely, longer terms lower the monthly payments, but increase the total interest paid. And then there's the monthly payments. This is the amount you'll pay each month towards the loan. It includes both the principal, which is the original loan amount, and the interest. It's important to choose a monthly payment that comfortably fits within your budget. Shopping around for the best loan terms is a key step. Different lenders offer different interest rates and terms, so it's worth taking the time to compare. Online comparison tools can help you sift through the options and find the most favorable terms for your situation. Keep in mind, though, that the best auto loan for you isn't necessarily the one with the lowest interest rate or the longest term. It's the one that aligns with your financial situation and goals. In summary, getting an auto loan involves having your credit checked, understanding interest rates and loan terms, determining affordable monthly payments, and shopping around for the best loan terms. Understanding how auto loans work is the first step towards making an informed decision. While auto loans can be a great way to finance a car, they come with their own sets of pros and cons. Let's first look at the bright side of auto loans. The most obvious advantage is that they make car ownership more affordable. Rather than having to shell out a lump sum amount that can potentially drain your savings, auto loans allow you to spread the cost of the car over several months or years. This makes it possible for many people to own a car who might not otherwise be able to afford one. Another benefit is that auto loans can contribute to building your credit score, provided you make your payments on time. This is because lenders report your payment history to credit bureaus. So if you're diligent about your payments, an auto loan can help boost your credit score, which can be beneficial for future financial endeavors. Now, let's switch gears and talk about the potential downsides. A significant disadvantage of auto loans is the risk of repossession. If you default on your loan, the lender has the right to take back the car. Repossession can have severe consequences, not just leaving you without a vehicle, but also negatively impacting your credit score. Another drawback is the interest that comes with borrowing money. Over the life of the loan, you'll end up paying more for the car than its original price. The longer the loan term, the more interest you'll pay. And if your credit score isn't great, you might be stuck with a high interest rate. Lastly, the commitment to an auto loan can be long-term, often stretching over several years. This means you're tying up a portion of your income for the duration of the loan, which might limit your financial flexibility. Knowing the pros and cons can help you decide if an auto loan is the right choice for you. It's crucial to weigh these factors based on your financial situation and lifestyle needs. After all, an informed decision is the best decision. So, you've decided to get an auto loan. But how do you ensure that you get the best deal possible? Let's start with the basics, your credit score. This 3-digit number is a measure of your credit worthiness, and it matters a lot when it comes to auto loans. Lenders use your credit score to determine whether to lend you money and at what interest rate. A higher credit score typically means lower interest rates, so it's in your best interest to boost your score before applying for an auto loan. Pay your bills on time, limit your credit card usage, and avoid taking on new debt. These steps can help improve your credit score over time. Next up, shop around for the best rates. Don't just settle for the first offer you get. Different lenders offer different interest rates and terms, so it's worth your while to do some comparison shopping. Check out banks, credit unions, and online lenders. You might be surprised at the range of options available to you. Remember, every percentage point matters when it comes to interest rates. Even a small difference can add up to significant savings over the life of your loan. Finally, understand the loan agreement before signing. An auto loan is a big commitment, and you want to make sure you're fully aware of what you're getting into. Look for the total cost of the loan, the monthly payment, the interest rate, and any fees. Be sure to ask about the consequences of late or missed payments. If something doesn't make sense, don't hesitate to ask questions. It's better to get clarification now than face surprises down the road, so there you have it. By focusing on your credit score, shopping around for the best rates, and understanding your loan agreement, you can put yourself in a strong position to get the best auto loan possible. With these tips, you're well on your way to securing your dream car with an auto loan. Auto loans can seem complex, but with the right knowledge, they're a tool you can use to your advantage. As we journeyed through this discussion, we've learned quite a bit about auto loans. We started with the big question: what are auto loans? We learned that they are essentially agreements between a lender and a borrower, where the lender provides the money to purchase a vehicle, and the borrower agrees to pay it back with interest over a set period of time. We then delved into how these loans work, exploring the intricacies of interest rates, loan terms, and monthly payments. We discovered how these elements interact, and how they shape the overall cost of your car loan. We also weighed the pros and cons of auto loans. On the upside, they enable you to drive away in your dream car without having to cough up the full purchase price up front. On the downside, they come with interest charges and could potentially lead to financial distress if not managed properly. Next, we shared tips for securing an auto loan that suits your financial situation. We emphasized the importance of shopping around, understanding your credit score, and negotiating terms that won't leave you financially strained. The key takeaway is that understanding auto loans before getting one is crucial. It empowers you to make informed choices and avoid financial pitfalls. Remember, an informed decision is always the best decision when it comes to auto loans. Thanks for watching and drive safe.